offline, we talked about a deal that went bust. It was a portfolio in Houston. Very unfortunate. And I didn't know that operator. I don't know them. I've kind of heard some of the, rumors after the fact. But at the end of the day, what I hope comes out of that is the passive investors, the LPs, that they take on themselves more personal responsibility to underwrite the operator and not chase IRR. There's a lot of operators, investors out there. They'll look at 3 or 4 deals and be like 15, 16, 20 IRR. Yeah, I want that one. And it's it's not that simple, and it's really dangerous.
It is. And the limited partners or the passive investors don't have the underwriting experience. And if it's a syndication, the deal sponsor doesn't have the experience either. They haven't been through a couple decades of market cycle. So there's a couple really good key points that you mentioned. And we like to say you underwrite the horse and you underwrite the rider. That's the team. And if a property doesn't have an excellent team, you gotta team up with people who do. Even if you have to give away a larger portion of the deal, you want to be able to sleep at night because your investors are getting paid well. And they are also safe and they're secured by the collateral of the property. So we want to do that risk mitigation in a number of ways so that the investors are safe.
And can I add something to that too?
Yeah, absolutely.
When investors are looking at a business plan on an opportunity, and they'll see the management team, the sponsor team on the business plan, the PowerPoint, and it'll have some probably well-known faces. And there's usually a couple of faces on there that they'll tout their experience. They should have that, but ask their level of involvement in the deal, because there are some organizations, coaching groups, and all that will lend the primary coaches or mentor lend their credibility to help close a deal, but their involvement is very little and maybe even none outside of helping get it closed. So the last thing that you want is thinking, hey, there's someone on here that's got 20 years of experience and they have 3,000 units under management. Wow, they must be a good operator, but they're not the one doing it. It's the other guy or the other gal who they just started a year and a half ago, and they're really, really green. So, and it's not that deal couldn't be good, but bad operators can ruin a good deal. So what we do, I'm not opposed to,
or it's not a good deal, or it's just not a good deal and it shouldn't be done.
Yeah.
I agree with everything that you've said, because there are very inexperienced people who are ruining the investment market. And it's concerning for the investors. So, listening to what you're saying is so important, is to drill down in there. And it's not about familiarity and recognizing somebody at all. I think that the bottom line is that over the last 3 years, there are so many deals that should not have been underwritten. The interest rate hasn't been at 2% or 3% for a very long time, and it stayed too low too long. So anybody new in the market said, oh, anybody can do real estate, this is easy. But what about when that interest rate normalizes at 5% or whatever? So we have to be underwriting our interest rate when it's not 5%. We have to underwrite it too high. We have to adjust our gross operating expenses too high as a buffer. We have to have our inflation rate at 3% or 5%, not 6 or 8 or 20%, because that overvaluates our property. The way that we underwrite our deal and we have underwritten the Prestige is We have 5 or 6 places where we've mitigated risk. And we said, okay, what if everything goes wrong? How will the property operate? And as a former engineer, I have to give the property a little bit of credit and go, okay, on the rents, we're going to go medium to medium low. We're not going to go, we're not going to project high rents. And so based on those numbers, that's where we get our IRR. But any other deal, I know they have painted lipstick on that pig and they're projecting blue skies on everything. So buyer beware.
Yeah, and
know.
unfortunately, some of those will come back. I think banks will probably be a little bit more willing to do what they can to negotiate before just taking back in mass, having learned from 2008.
Yeah.
But they'll take them back if they need to, or if they have to. Now, for newer operators, this doesn't mean you can't do deals. It just means like if I'm going to go do a new development deal, especially Class A, new development, prime area, I'm just not going to go try to do that deal myself. I'm gonna call UDL or someone that I know that knows that market and that type of exit strategy, and we're going to work on that from the JV perspective. And I'm gonna take a back seat a little bit and learn while swinging a hammer, learn while operating. And as you go along and get a few of those under your belt, then even though you still might be green because you're only 3 years in or 4 years in, that's experienced, but it's also experienced enough where it could be dangerous. That's when you can start hiring.
Yes.
You can hire not the entrepreneurs like us. You go hire someone who has an incredible experience in asset management, project management, property management, capital raising. You can hire those A-level players to join your team, and then that helps solve some of those credibility gaps. And then you can start.
That's exactly right.
Play the long game.
You're exactly right, and that's what we've done at the Prestige. Is we have 402 years of commercial and construction experience, and these people are sharp. They have industry experience. It's that credibility gap for somebody who doesn't have the 20 years of commercial, but it's also that knowledge gap, because my morning was spent with our civil engineer, our general contractor, and our co-developer, and we all, and our certified arborist, to solve this issue. And it is so fun to be in that kind of room where iron sharpens iron. So just like you said, we're solving that credibility gap, but we're also solving that skill set gap. And the skill set is what has been missing in this market for a couple of years.
Definitely.